Okay, guys, this is Bill Soriano from Pittsburgh. I wanted to come on today. I wanted to post this video on YouTube for you guys today and send it out to you to the list here so that you could see a couple trades that have gone off. I'm going to try to make some videos during the week showing you when these trades are going off and how they go off. Now, the purpose of this isn't to give you trading signals. I'm trying to teach you the strategy. So again, like I always say, I'm not a financial advisor. I'm not qualified to give you financial advice. What I'm giving you is for educational purposes only. Forex is a risky business. You can lose all or part of your capital, and you should always try any new strategy first on a demo account, right? Before you trade with real money. So you do it on a demo account until you make sure it works for you and it will fit into your schedule. Okay, so this is for our 4 hour. Now that that's out of the way, this is for a damn near 100% objective 4 hour supply and demand zone trade plan, right? And so I sent a video out to you guys, on Saturday or Sunday morning, I think, showing you the weekly recap for last week. Wasn't much going on. So I wanted to show you these. So this is GBPUSD, and we've been waiting for this trade to go off since about the end of April here. So price came into our 4 hour zone here. Now, what's unique about this, again, we're on the 4 hour time frame. Look at the moving averages, right? This is clearly bullish, right? There's the 800. Now, you might say, Bill, why is this demand zone so big? And the reason for that is if I shut off this indicator to try to show you, okay, you could see that there's two distinct order blocks showing up here. The indicator is giving us this one here and also this one down here. And since they're so close together, we have to put them both together, right? Because price can move into this one, you know, and if we just use the bottom of this as our stop loss, then we're going to get stopped out and we're going to lose money. Just doesn't make sense. Again, as long as we can get a 1-to-2 risk to reward ratio trade, right, with that larger stop loss, right, then we're going to do it. We can't get a 1-to-2, then we don't take the trade. Okay, right? What do? First, we try to get in at the 71 fib retracement. That doesn't give us a 1-to-2. Then we go to the 78.6. If that doesn't give us a 1-to-2, at least a 1-to-2, then we look for a refined supplier demand zone on the 30-minute or on the 1 hour time frame. If there's one on the 1 hour, you should take that one first. If there's only one on the 30-minute, then take that one. Most of the time, you're going to be able to get in trades at the 71. Now, if you're watching the video here, just want to tell you guys real fast, if you watch this video here, this video hasn't been updated. Okay, so this 1 hour entry model hasn't been updated. It has been updated to reflect the addition of the 30-minute change of character and also moving away from that 61.8 fib retracement and just starting with the 71, then the 78.6, then the refined supply and demand zones. So as price comes down in here, then we drop down to the 1 hour and we wait for that buy shift, right? So we got a couple of them. We got one here, but then there was no change of character on the 30-minute, right? And I could just kind of plot these out for you just so you could see. We get one right here. When we drop down to the 30-minute, there's no change of character, right? The indicator is not showing us a recent break of structure, some kind of structure. It's giving us a change of character, right? It's not there. So now we go back to the 1 hour. Price goes back down and then it crosses back above again right here. Let's look on the 30-minute again. No change of character. We would have to get this area right here broken at least for us to get a change of character, okay, at this point here. Okay, comes back down. Now we get another move up here above, kind of right here. Price kind of stays above. And then what happens is you get a change of character right here. So I'm going to get rid of this one. You see the indicator is giving you this. And the reason for that is because price, kind of makes a new low here. It looks like equal lows to me. And since it does that, it now uses this high as a swing high. It's marking it as a higher high. You see? And so this is a lower low now. And so this is now your change of character. And right here, we get that break of structure that gives us the actual change of character. This candle right here, right? We like impulse candles like this to give us our buy or sell shift and also our change of character, okay? So now if we go back to the 1 hour, what are we going to do? Get rid of that. Okay, we use this low right here. We drew our fib from there to there, right? Let me just show you what it looks like. I grab the fib tool right here on the 1 hour. I go from this low to this high, right? Now I go back to the 4 hour. I say, okay. Now again, our stop loss has to go all the way down here at the bottom of the second demand zone, right? Where's our take profit go? Well, look at this. There's no supply zones up here because price is at new highs. Okay, so when there's no supply zones for your take profit, you just use the high. Okay, and that's what we're using here for our take profit. Okay, so you see here, if we put this at the 71, try to get in at the 71, we have a 1.93 risk to reward, 1 to 1.93. So that's why this had to go to the 78, which gives us a 2.19. And you can see here, the price comes back down, gets us into the trade right here on the 1 hour time frame at 12 o'clock on Monday. That was today. 12 o'clock today, and we are currently in profit. So that's a trade that went off today. Now, there was also a trade that went off on Friday, right? This was a sell in CADJPY. See price in that zone up here? Let's go to the 4 hour, right? Okay, price was bearish. We did get a cross here that we circled. Our 50 did cross above our 200, but we had already had this pegged as a bearish downtrend, okay? And so as long as price doesn't get above this 800 here, we're okay with that little cross right there, okay? This was clearly in a downtrend here, and in order for price to get back to this supply zone, the 50 did have to flip above the 200 just slightly. Okay, so that's our zone right there, right? If we shut this off over here, we can see that the indicator is giving us this as our supply zone on the 4 hour time frame. So again, let's drop down. We'll see what happened here. Price came up into that zone. We're looking for a sell shift, right? We get a sell shift right here. Looks like right there, 892, 979. Yes. We drop down to the 30-minute and we wait for a change of character. So where do we get a change of character? Right here, the indicator gives us that change of character. And this impulse candle right here comes down and closes below that higher low marked on the chart right there. Okay, that allows us to come back now to the 1 hour, right? We can now draw from here to here. So our drawing went from this high to this low right here at the time. Okay. And then what happened was price came right back to the pip. Let me just show you this. This was a little bit further down. So as you can see here, price comes back. Now what we do, we need to set our, right? We're going to use this area up here for our stop loss, right? And again, let's go to the 4 hour because that's the 1 hour, right? We just go right above that supply zone for our stop loss. And then our next demand zone is down here. Okay. So this gives us a 1 to 2.4 risk to reward on our trade, right? And as we could see, price comes back to the 71 and then shoots down. So this was a trade that went off on Friday. Okay, CADJPY, and today we had GBPUSD. Now there's a couple pairs that we're watching here for a change of character on 30. If you remember, guys, we set what do we do? It's damn near 100% objective, right? We use these three moving averages, the 50, the 200, and the 800, to determine the trend bias on the 4-hour time frame. Okay. Then we use the Lux Algo Smart Money Concepts Indicator to show us where the order blocks are, and the order blocks are our supply and demand zones that we trade from with that trend bias. So if the trend bias is down, we're looking for price to pull back to a supply zone. If it's up, then we're looking for price to pull back to a demand zone. And we let the indicator give us those zones, right? So that that part is pretty much 100% objective, right? There's no subjectivity there at all, okay? Now, once price hits our zones, our 4-hour zones, then we drop down, we look for two confirmations. We drop down to the 1 hour, and we wait for that buy or sell shift, right? The buy or sell shift is 100% objective. That 5 EMA, which is the yellow line, right, will either cross and close below the red, which is the 13, or it won't. Okay, it's objective. Then once we get that, we drop down to the 30-minute and we wait for a change of character. We look for that break of structure, gives us a change of character, and we look for the indicator to give that to us. Now, this is the part that could be a little bit subjective, because sometimes the indicator, a very small percentage of time, maybe 5% of the time, 5 times out of 100 trades, the indicator may not give you a very good change of character. So it won't use the best swing high or swing low to determine whether or not that's a change of character. So that's where the little bit of subjectivity comes in. And if we get that change of character, then we draw our fib, right? And we try to enter in one of 3 places, right? We draw our fib. We know that the first place we try to enter is a 71, right? So we set that up. We put our stop loss just above for a sell. We put a stop loss just above the supply zone. For a demand, for a buy, it goes just below the demand zone, right? Then our take profit, again, this is on the 4-hour, right? We look for the buy or sell shift on the 1 hour. We look for the change of character on the 30-minute. If we get that, we go back to the 1 hour, draw the fib. Then we go back to the 4-hour, right? Make sure we have the right stop loss and right take profit, right? So for a buy trade, like I told you, the stop loss is going to go just below the demand zone, and the take profit will be at the beginning of the next supply zone. This is all in the PDF file, guys, okay? So you don't have to write it down. It's all in this PDF right here. It's all in here. So again, for a buy, it goes, stop loss goes just below the demand zone. Take profit goes at the beginning of the next supply zone. For a sell, the take profit, the stop loss goes just above the supply, and the take profit goes at the beginning of the next demand. If you don't have a supplier demand to use for your take profit, then like in the trade I just showed you, you use the high or the low. High for a buy, low for a sell. Okay. Now, once you have that, does the 71 retracement on the fib give you at least a 1 to 2 risk to reward? If it does, then that's where you want to get in. If it doesn't, then you try the 78.6, right? If that still doesn't work, then you have to look for the refined supplier demand zone on the 1 hour or the 30-minute. If you have one on the 1 hour, you want to use that instead of the 30-minute. If you don't, and you have one on the 30-minute, which you should have, then you can use that. You will have one on the 30-minute, I guarantee you, otherwise you wouldn't have had a change of character. And so you shouldn't be taking that trade anyway. So that's what this looks like, guys. These are the 2 trades we're looking at right now. And I still have this, I am still in this CHF CADJPY trade. And you can see here we are in profit. So let me just get into my trade locker account here. I logged out of there. This is my $100,000 demo account, guys. Again, I'm trading this strategy on demo as well. You should definitely as well if you try it out. So here's our one position here. And we're currently up almost about $453. Okay, guys, that's it for today. If any other trades go off later today or during the day tomorrow, I'll come back on tomorrow and show you those.